Hey everyone, welcome back to the TraderLion podcast brought to you by DeepView. I'm your host, Richard Moglen, and joining me today is U.S. investing champion Leif Soreide, and he's also the founder of Champion Team Trading. Leif, always great chatting with you, and welcome.
Hey, thanks for having me, Richard. It's always fun talking to you. We've got a lot of stuff to talk about. Difficult market, of course. Going from cash to coming back within the time frame of setting up the interview is kind of going to be interesting. We're going to maybe talk about how difficult it is how to come back from cash. I think that's kind of something everybody needs to kind of practice and go over, and that's going to be the focus. Maybe we'll see how it goes.
Yeah, for sure. It's been funny. You know, we've talked about doing one about shorting a few times, and then the market rallies, and then it falls apart, and we got to switch topics. But now we're finally doing this, and we'll cover a little bit of everything, as you said. So
yeah, let's just whatever you want to cover. Let's just dive in and see what happens.
Yeah, let's do it. To start things off, I've got a little bit of a kind of an open-ended question. Obviously, 2022 was a bear market. This year, there's been definitely some signs of improvement, but we're still not out of the woods yet. And just recently, over the past few days, we've seen a nice rally, kind of changing the tempo of the market. But just starting things off, how have you been personally handling the different market environments, and what kind of advice do you have for traders out there to kind of bend with the punches and adapt to each new situation?
Right. Well, a lot of the pandemic traders are kind of getting a dose of reality, which is this market is kind of more typical of what you're going to find, but it's kind of the never-ending bear. Just when you think it's going to start forming up, and they have these kind of, the market has what I would call like fighter jets to shoot down all the breakouts, right? So these standard kind of bull market tactics don't really work. So you're going to have to kind of adjust. And what I've been doing is trying to buy leaders on pullbacks and get into stocks that have huge earnings and then pull back because of the market, and then they almost don't react to it. That's sort of the focus for me right now. And that's 2020. 2020 was easy. You draw a line across the top of anything, and the breakouts would work. 2022. I traded Champion Team Trading, and one of the members won the $1 million+ contest, Samir, and he was mostly shorting. He said he wished he would have gone a lot more short. I mean, most of my better trades were to the short side because you had more time to, for the trend to work, because the trend was down basically. So
yeah.
And then this year we have this kind of change of pace as we're working the bottoming process, and I think things are going to get better potentially from here as we start to see energy kind of drop off the stocks in trend. And I hate swing trading energy stocks. It's just, they don't act the same as growth tech. You want to break out NVDA or something like that. That's going to work a lot better. So, I'm excited to see what happens. And, with energy dropping off, the price of energy comes down, inflation might, be on the way down. And, the Fed might have some excuses to start, the QE in the process and stimulating the economy and such. And that's the best conditions with energy dropping off the list and tech at the top. And that's something that we were just talking about that I think is going to be interesting to see. And I haven't heard a lot of people say once energy drops off, I think we have a chance, and that's where we're at, in my opinion. So we'll have to see if it holds or not. But we're kind of on the brink. I did a tweet that said, we're living on the edge. The cover of the Aerosmith covers sort of the market here in the last few weeks. And I mean, I've got one foot out the door I jumped out the door the other day and I jumped back in because, the standard swing trading incremental exposure situation is a little flipped on its head. You kind of have to get in when they start setting up, when it's unexpected, and then sell into that strength, or at least try to hold for a move and see if it's going to hold or not. And then you're going to have to give back a lot of it. That's unfortunate. That's the last roll I did was a lot like that. A couple into strength, some pieces into strength. And then you're going to kind of roll back down. But those are the same stocks I'm targeting as I'm swinging back into the market here, as it finds its footing for whatever reason, a lot of different reasons, and climbing that wall of worry, perhaps. So
Yeah, I think that's great. And let's go ahead and dive into a chart of one of the indexes and kind of talk about, how you've been trading different market cycles. And also when you've, maybe been looking at the charts, realize the overall longer term trend and realizing, we're entering potential resistance. Maybe now's not the time to be aggressive to the long side, but instead look for more of the opportunities to the short side, or to step out and build up cash deposits. So yeah, I'd love to just kind of walk through this chart and hear your thoughts.
Right. Well, the S&P 500 you can see is on this chart, and then the stocks in the champion team trading.com stocks and trend. We have our own custom TC 2000 scan here that kind of weeds out the slower stocks, very inspired by the Minervini trend template, of course, trying to get stocks in uptrends. But, we're looking over the 50-day moving average only, and a few other, $5 plus and a lot of other restrictions. Then we get these stocks and trend, and you can go back to 2021, February, a little head and shoulders itself on the stocks and trend. That was kind of the top there for standard swing trading. Then it got more difficult, and you'd have to be more tactical since then, of course, and you can't really draw a line across the top of anything. Sort of the S&P 500 has a little bit of a sideways head and shoulders consolidation, but it's this healthy basing that has to be negated to get a real good uptrend, in my opinion, there. But we're looking here as we're looking on the right side for some kind of a basing area of the stocks and trends. We want stocks holding. That's what we want to see. And maybe we'll look at the NASDAQ.
Yeah, NASDAQ's a lot stronger recently than the S&P.
Yeah, so we're looking at the NASDAQ here as this kind of turns up there real quick and really surprises everybody, kind of breaks this, get a little diagonal, put a little emphasis on that. But, this a lot of the mega caps and a few of this, NVIDIA, Apple kind of holding this up. The breadth isn't great, but there's some leaders that are turning with this move. So you have to be concentrated. You can't just buy everything in this environment. So that's the thing. And I don't only trade high tight flags. I forgot this. Somebody, a lot of people ask, what does he do when high tight flags aren't working great? And they don't work great most of the time. They definitely don't work great in this environment. And I can show one or two that I did. We're looking for 5 to 10%, and that's probably all we're getting. And then you get thrown out on the rest. So it's not a great environment for those. But you see that, stocks were setting up okay, and they just quickly fell apart there. And that's when you're showing the exit and you go to cash. But if they set up again, you got to come back before there's, you wait for too much confirmation, you're going to get sold to again. So you got to start buying those stocks that didn't really fall apart, the stocks that kind of held up the best. And that's what I'm looking at right now. We're going to probably bring up a few of those.
Yeah, let's do it.
So one of the things, I just bought this one today. So BWXT is, I like these kind of unknown names, and nuclear play through earnings. So earnings are, maybe we'll talk more about that too. The kind of earnings pivot, I'll buy, something coming out on earnings, I'll buy that. And I sold into that pop there as the market has sort of this fighter jets shooting you down there, right? That's the strafing fire on the breakout. A lot of these like Airbnb and all these ones that popped, and then they're pulling back now. So we're buying that turn there, and then we're going to see if we get anything to work. I tried it in here and then had to kick it out even. It's the same spot basically, and then tried it again on earnings. I like to get away from stocks on earnings, but in this environment, earnings almost is the whole point that's everything's about earnings. MRTN is one, So this one's a great example of how earnings move stocks. And if you're not messing with the stocks with great earnings, you're wasting your time in this environment. And buying them on earnings is a good move too if the earnings kind of blow out there. So you see this move, and then actually this failure here, and these are all sort of buyable. They're a little sloppy, but you have these different earnings pivots, these earnings moves here and there, and then the ones that we're looking for. We had, which ones did we have? Like Axon, AXON. It's one I look to get back into. You get this earnings blast off there. And, I was buying it here, and then, adding to it here is, there's all the methods I'm using right now. The position sizing is the most important thing. If I can't get in the money, I'm adjusting it at the close, and I'm not some kind of random trader that just taking it on and off all day. You got to adjust at the close, and you got to be huge in the ones that are working. You put your size on, and if it doesn't go anywhere, you don't need to be huge if you're, being a real chicken right now, which is kind of what I'm being for the most part. But at the same time, I got to press it because I think this, everybody got off sides, and the money's coming back into some of these leaders, and I might be wrong, but we're going to have to see how that plays out. But, more of the same. If you look at something like, Box earnings, it's just all about the earnings right now. I don't know if this is the best example, just come up with a few other ones. Melly. So I'm in Melly. I got in here on earnings as it I do have a method of, when it comes inside and comes back out, that's when I bought it. It actually slipped back inside the prior day there and took off. And I'm selling pieces. And then, any kind of channel break, I'm taking 50% off. And then I went to cash there. So I have a little bit of cushion in that, and then I just got back in as it starts to turn up again. And we'll see if it holds, but the earnings are there. I think the earnings beat was about 40%. So they don't give guidance, but that, it looks really good. You have an overall decent looking base here, kind of higher lows, and little cup and handle itself on what I'm buying there. So other stocks you want to check out, like I'm looking at FTNT. I just bought this today. This doesn't even look like it sold off with the market at all. The market's going lower. This isn't doing anything. So you got that relative strength. I mean, I think that's worth a shot. Keep my size because, closed on the highs there. Looks pretty healthy. You're breaking a slight diagonal too. So we're using all the different chart pattern and such in trying to find the confluence of, of spots to find the right buy point with the market turning as it did. So other things that were...
Leif, can I actually ask you a question on FTNT?
Yeah.
Go back to this one. Can you talk a little bit more about, how you find the pivots, what you're kind of looking for? Because obviously you mentioned you don't want to buy right as it's kind of clearing that obvious base breakout. You want to find a spot a little lower down, a little less obvious where you can manage risk a little bit tighter. So can you talk about finding that pivot and what you're looking for in terms of price and volume?
Well, I'm looking for any kind of flat area that's kind of always breaking the highs, the prior highs, and that's what I'm looking for. And in this environment, I'm looking for stocks and groups that are holding up. And this relative strength line here, so versus the S&P, has been very strong as you pull in there. I'm not really reading the volume so much here as I'm reading this kind of volume burst here. So there's a lot of volume on earnings,
right? And
that's sort of that character change, and then I'm looking for some kind of viable area. Not super fast, but we're looking to get in there and the volume never really came in. It doesn't have to come in. Somebody will tell you, well, there's no volume there. Well, it's fine if it goes up. I mean, that's the thing. It's coming. There's no sellers either. Where's the sellers, right? You look at the chart pattern, you have like, a little cup and then another little tightening there. So you have these tightenings throughout the pattern. And it could pull back in on the 21 and turn, but I think that a lot of the money is going in these names right now. And this one, they're just not interested in selling it. So to me, it looks like they want it. So
and where would you place your stop loss to manage risk on this type of buy?
I mean, I typically want to go for 5% or less. So I mean, it's going to be somewhere below the 21 EMA most likely. Depending on how things are acting. I mean, in this environment, anything goes. You can cut early, of course, but
you got to be quick.
Yeah, you got to be fast. I mean, if the market opens down 1,000 points and I get a chance to take it off back even, I mean, I probably would. But I think things have it's flushed out, and you see some of these banks going bonkers and closing and such, and a lot of backstops coming in, and you see some bankruptcies sometimes, and then the stocks go up 10 times from there. You see something like these oil stocks. If go back to here, I mean, I think this is like a reorg, right? You go from 16 to 80. I mean, this is the kind of move you get once they flush all that stuff out potentially. So looking maybe the market's a little more forward looking than everybody is panicked right now. So we'll see if everything kind of starts to act right or not. Other ones I'm looking at is 4. You have something that's basically the overall strength of it is incredible. This big uptrend just kind of dropped out into earnings. I think is everything's about earnings. I don't know if you want to hold into earnings. So I'm sure everybody sold this. Well, the market kind of rolled over a little bit there too, but trying to get back involved with this one on this turn up here, really on top of the prior support. That's what we're looking for. A stock I've been stocking, so we'll have to see if it's keeping the size for now, but want it to start to trend and see if we can get any kind of real moves out of this stuff. But anything we're cutting. I mean, we had to cut a lot early. I had to cut a lot early. You get into REGN, for example, then you have any kind of little channel up and a channel break. I mean, then you're out. I mean, that's all there is to it. And then a lot of the XBI looked really great. So this is the kind of market we're in. This is a pretty negative look here, living below the 200-day. But for a while, I mean, I had to get in. I got in this one and I had to kick it out even. So it's been a lot of work for not a lot of results so far. But holding on to the account, having that confidence that when things start really ripping, you're going to be able to get in these leaders that aren't really not affected by the market selling off, and able to ride the next uptrend. So.
Yeah, and going back to your position sizing, what's a typical kind of starting position size right now as a percentage of your account, and are you looking to adjust that at all if things really start working for you, you start seeing positive feedback?
Yeah, I mean,
Yeah,
I want to do 5 to 10% positions, and if they start improving and I start to get traction on other ones, I might start adding to some. So I mean, I don't want to have 100 positions really. So the ones I'm focused on, I'm trying to work on the sizing and trying to get those as big as possible at all times. But I'm on my red signal and your own personal signal for difficulty. So it has some to do with sizing. You might want to be, your smallest 25% or less invested, but you can combine the signals if you're getting traction, but you just recognize that the market's kind of dangerous. So you're kind of cutting faster, but you're having more size if you're having any success. And in the green signals, obviously, everything is working great and you're on margin perhaps or something like that. But this is sort of a living on the edge market. So we're sort of on the red signal. Even if we're finding some size, we can get into a couple names,
Yeah, and you mentioned before we start recording that you have a few conditions that you maybe see that there's signs of improvement. Looking at the Nasdaq, we potentially put it in a nice tradable bottom. Yeah, what are you kind of looking at? And
I mean, something that's a real big bonus here is USO. So I don't know the symbol for WTIC here, but this is the crude oil ETF here is kind of rolling off here, kind of representative price of oil. We want to see this kind of roll away, and get out of here. So inflation can go lower, and money can start flowing into tech. You start to see this going higher, and then price of energy going lower. It could be part of the combination that we need to see. So that, I mean, that's kind of the big thing that I don't hear a lot of people talking about, but I need to see energy stocks kind of get out of the way before I'm ever on my green signal, just ripping breakouts and stuff. But we're still cautious right now.
Yeah, and the Nasdaq definitely looks the strongest of those kind of major ETFs. What do you think about the IWM or the IWO? It's a little bit weaker right now, but it's still showing some
Yeah,
nice
that might have to do a
signs.
lot with the lending and the banking. So I think the money's going to the safety of the larger names that have better capitalization and such. The smaller names are a little bit in trouble perhaps, but you have a little bit of a head and shoulders look. Hopefully this can start to pop up in here, and they'll come back when these kind of banking fears kind of go down, but I could be wrong. I mean, it's kind of higher lows for now, right? So that's constructive if we can get that in there. We want to see the S&P 500 closing over the 200 there. And this is kind of higher lows, looking pretty good. So I mean, it could be looking good if this is overall base and clearing these levels here.
Yeah.
It would look like a pretty decent stock base if this level was cleared, and then we have some stocks moving with it besides maybe Apple. Right now it's like NVDA, it's like a little kind of short stroke pattern up there, kind of breaking out. AMD, a lot of these names here, and SMH was one that I tried to get into back in here, and the market really fell apart. So I got out even, and then I missed the 50-day, and then this kind of really ripped today. So I think this could use some sideways action now. I'm not super convinced. But I think this looks good. I mean, this can go sideways and take off there, and maybe a lot of that AI talk has something to do with it. But I think it's money coming back into tech and maybe out of energy and such. So,
yeah, today, which we're recording this on Thursday after close for everybody watching, big cap tech like really dominated. Microsoft, Apple, Google,
yeah,
all
Apple,
these names.
Microsoft. It's kind of safety. They've got plenty of money, and it's a lot of this kind of zombie moves all year. I shorted Apple last year at a pretty good spot. I mean, you have one of the short techniques I use is you get this kind of zombie buying. It's sort of this frozen rope idea that Dan Zanger uses. And then I literally shorted right there, and I got that perfect, but they faked me out on the rest on this one. So, it's just such a wild market. It's hard to stay, the trend to stay that easy where you just go right all the way to the lows and then cover at the lows. That's really never going to happen. So anyone thinks they can, cover exactly the right spots and sell exactly into the highs is fooling themselves. You just have to hit your averages and, where you're going to be profitable and do those risk multiples.
Yeah, and one question I wanted to ask you is, looking at the stocks that you brought up and we're trading, do you care so much, how far off all-time highs, how much overhead supply they have, or are you just kind of trading the
Yeah, I
shorter term
do.
pattern?
So I know a lot of people would probably trade Apple here. I mean, I don't like it because it's within the base really. What was one of the ones we were talking about today? We're looking
Melly,
at
yeah.
we're looking at ADI actually today. So talking with someone about this. This looked like, so I actually traded this. I bought this in here and I sold it into that pop because it's going into earnings. I didn't want to throw the dice and see what happens. And of course, I missed out there. And I missed out on the ELF pop also over 2% stop, and then it ripped on me. So I do miss the good ones sometimes. And this one came back in for a decent enough little turn that I didn't get involved with. Now it needs to sort of prove itself. So, I mean, this has overhead supply, in my view, in this pivot. So if you're coming down here, I mean, this is too low to start the position. I'd like to see it kind of tighten up and start buying the turn down there as you start, you're getting a flatter area to buy a turn off of. But one of the things that just reminded me of is this group here. You have to look for, the market's giving this rare opportunities of these big pullbacks. And the stocks that are setting up are obvious in a way. And I was looking at this one. I didn't buy it though, but it's a great example of a big pullback and there's no volume, right? And versus the market. So, I mean, this was a great buy point. I didn't touch because it got a little bouncy in there, and I couldn't really, kind of open on the high and then close lower or something. Something threw me off there. Then eventually just kind of ripped out of there and it went on this run. And then a lot of people ask me, is this broken or a shakeout right up there? So broken versus shakeout is another fun thing I was just talking about. And CPRX is kind of, I think he went through earnings. So I mean, this is broken in my view because it can't rally back, right? So, I wouldn't trade it. I mean, maybe it's a great company. I'm not saying that. Just the chart. We're talking about the charts, of course, versus MOD. So MOD is something I bought here and was selling into strength up here and closed it before earnings. And I missed this earnings gap to the downside. So you do miss those too, versus in the upside ones, because I mean it's all just kind of gambling into earnings, no matter what the options volatility says. Anything goes really. So it's just on average, the options are implying a certain move. It's not necessarily going to constrain it 100%. And then it shook out there, so that's a shakeout, and then we got back in. I got back in there and turned up and was sold that into strength. And the last little mini piece when I went to cash, I think was up there or something. So this was one of my better trades lately. And, I do take some stupid trades too, of course, like, I think I got in this one, I think I bought here and I just closed it, slipping the low. I mean, it's just, a lot of trades like, little quick paper cuts too. And, so that's just a stop in you don't really typically get a full stop in the same day. So we're, something like this, if I'm doing this, the low of the day, I'm doing it smaller because you're more likely to get this stop in the low of the day. And you really have to adjust at the end of the day. If you're adjusting throughout the day and it comes in 1%, you panic out. It's really not proper trading in my view. At least you have to be consistent to be kind of adjusting at the close. And you're going to have to take a full stop in the middle of the day sometimes. Sometimes it'll happen. That's what a stop is for. If something just drops, that's going to go. But usually it'll bounce back by the end of the day, and you're just chopping yourself up, fooling around with it all day. And I think a lot of traders do that. And that's probably the biggest mistake everybody makes that they don't admit is, chopping yourself up all day saying, oh, it's, 50 cents back in the pivot. I better sell. And then it's back out. I'm going to buy. And now you're raising your cost basis throughout the day. Those 3 times you tried it. So you're kind of messing yourself up.
And just a follow-up question on that, for people who haven't watched maybe our previous talks, do you execute on the daily time frame, or are you also going intraday and taking a look at, what those internal pivots and internal price action looks like?
I mean, I'll look inside, but if it's something I've been trying to get a hold of, the daily time frame is the main thing, but we'll even look at the weekly time frame. You got to have your good base, right?
Yep.
This is nice big base in that one. I'm in the Melly here, but now we're going from these stage I mean, because we're the end of the bear market, perhaps, right? So we're getting there at some point in the next few months, maybe. As you get to stage 4 declines in stage 1, obviously Weinstein stage analysis talk, is kind of the fundamental book for what's this book called? I can't remember off the top of my head.
Secrets for Profiting in Bull and Bear. Yeah.
Right. With a great book cover. He's got the coolest book cover too. So when you write your book, you gotta copy that. We'll do. With the microphone. So so this looks pretty good. That it's got the stage 1 going to stage 2, perhaps, right?
Yeah.
So you get this. Maybe it's going the uptrend. A lot of these stocks are starting to work on those, like Airbnbs. One of these ones has got like mega earnings all of a sudden. Sort of carving that out now. You're getting your stage 1, maybe stage 2. We're gonna have to see if it wants to turn. I got involved with this one here, sold 5%, and then had to stop out. And then there you go, just bouncing off the 50. Wants to bounce there, but they're shooting these down. They're shooting down the breakouts and the big earnings gaps here. So, and I don't trade earnings gaps. I trade what I call like earnings pivots, right? So if it's in a proper base, so you could title this earnings pivots in the notes in the video. Maybe this is something I bought here. Kind of open inside, and this is a viable pivot, decent base, little undercut on the end. I like that. It's tight area. I want to see a stop below sort of like 2 weeks of tight action there. So you take a look at the weekly, and you have these sort of 2 tight weeks there, roughly.
Tight closes, yeah. Yeah,
tight closes in there. So you get your stop below there and maybe some up there. You can stagger your stops too. But if it opens inside and pushed out nice and neat, I mean, I'm just buying that coming out, and then I'm just selling all the way up there. So, this thing just threw back without me.
Say gaps up above that pivot. You mentioned that if it comes back in and then pushes back through, that's maybe a spot to enter for you.
Yeah, if the earnings are there, it's not just anything, right? I'm going to look at the earnings. If it's a huge earnings surprise, this is a light one. I thought Melly was a big earnings surprise. Okay. I mean, I don't know if my math is right, but I think the earnings per share beat was around 40% of what was expected. So you're getting these numbers, starting to look pretty good there. And then, it was opening around, or trading after hours around 1200. So right away, somebody's reading the numbers, and my view is this looks exciting. And, some sellers showed up and pushed it inside. And, I do have some intraday stuff we'll use to buy the turn, as long as it's taking out the daily time frame, the prior day's high. I'm hitting it back there and then, selling into that strength and reattacking it. Should it hold? I mean, sometimes you want to sell into strength and let these pullbacks happen, because they're not letting anything just trend really easily anyway. So that might stop to be the case soon. As we had some easy trades in 2020. A trade like Fubo for like 100% in 5 days, and this doesn't exist anymore. The only high tight flags I'm getting is something like this. Like I bought RX DX and I'm selling it up there and having to give it up, there for a slight gain. So, MDGL was the other one. These are kind of speculative biotechs. I'm not, I don't want to put my whole account in these either. So, trying to find the turn spots. I found a turn here and selling out here, and as it starts to roll over, I'm out. So, you're not making the huge rips on these because the money is just not there. You're pushing things up infinitely like they were in 2020. So you got to be a little more tactical and shorter term, of course. So
I'd like to chat a little bit about after you've got a position, your process for selling some into strength and then trying to hold a little bit for a longer move. It seems like a lot of times you're selling into strength, and then that last portion of the position, you're waiting for that definitive sign of weakness where it's breaking the moving average or breaking, it looks like, the lows of the past week there.
You that kind of channel up, and there's a break in this environment. You might want to be out. That's all they have. This is the kind of the chart patterns. REGN. I think I mentioned this one. You get that little channel up, it breaks, and then you're out. Even Melly. This is why I got out of this one and got back in. I mean, this is pretty straight up action. Mm-hmm. As soon as that breaks, I'm selling 50% of it right there, 50% of the original size, and the little quarters. I'll sell a quarter there and there. And then I'll reattack it coming as it turns back in and doesn't just completely implode, right? So that's what we're trying to avoid. If we can, we're going to get hit on a few, but You have to be tactical in stocks that you think they really want, not just because there's a chart pattern. That's kind of you have to think a little outside the box too. Like I'm thinking this nuclear play in BWXT, for example, is kind of unknown, and I think that they're going to catch on to the fact that this could be a hedge fund favorite and some kind of a play down the road that's kind of unknown, even though the earnings are just kind of as expected. I think there's the story for the electrification theme makes sense. So I'm trying to look where they're not looking at the same time. More earnings turns in here, and then they're throwing back. So they shoot them down, right? Even coal, and we do want to see coal and all these prices go lower. So help inflation, of course, and natural gas is, this was when we're supposed to. I think Europe was supposed to freeze, so this is a different picture. As natural gas implodes, and you're below the COVID lows and the prices there. So there's some signs that we're having this shift, and perhaps they can start easing a little bit and kind of juice the growth stocks a little bit and create some easier trends and some standard swing trading that you can buy stock. Well, you still want to focus on all these tactics if you can make it at all in this environment and not get completely creamed. You're gonna be fine in an easier uptrend.
Yeah, for sure. And going back to the Airbnb chart, I wanted to get a little bit deeper into how you buy after nice move up on earnings, what you look for. It seems like you're looking for a gradual pullback, a little bit of tightness, and then trying to find again that pivot.
I mean, there's a lot of ways to do it. I mean, I think support, you want to buy on top of support. There's a little support there. Huge earnings. So when you get the huge earnings, you're wasting your time if you don't have something in this environment with huge earnings, and you're getting the rare conditions where they pull the market back. They show you that this has huge earnings, and then maybe they set you up in it. But this one, it fell apart with the market. Is they're raising money, but buying this kind of a turn somewhere on the moving average, over the previous day's high at some point, wherever you think is actually the turn, trying to read the volume. You might have to try it twice. This is I think that's where I bought it and sold some almost right away on the last try. I might have tried this before too. I mean, you're just taking it on and off is, that's not a good turn, and just kind of rolled over there, but it's starting to prove itself. So you might have to try once or twice, and selling some of those partials just to kind of make up for, your previous tries too, if you tried too many times. And, you got to be worried about your equity curve in this environment more so than anything else, than trying to be right. You don't want to go back to buying any losers you had. You kind of want to focus on the stocks that traded the best for you before you went to cash. If you're coming back from cash, like I just did, Axon. So I bought this in here, and we're selling it on the way up, and it did tend to, it kind of washed out there. And, I missed the earnings pivot. I think that was buyable there. I just was a little bit too gun shy at the moment as we're going this downtrend to buy that. But, this is giving another chance, and it looks like it wants to go. So,
and on this one, so here for the earnings pivot, it does kind of gap and go on you. Are you just going to let that go? Or if it's within X amount of that pivot?
I'll still go 1% to 2%. 2% is a little stretched because, you're trying to get your stop, or, how much are you going to give? I mean, I tend to go pretty small, like 5% or less. So, 1% in that range. If the earnings are just clear that they beat and just completely killed it, I'll probably try to grab it. But these earnings gaps, a lot of them come back and get filled lately. So, you have to be fast, even if you're doing those, I'm sure.
Yeah, for sure. And there's a question about, what you do when you're staying out of the market. So maybe there's not really any setups there. So what are you kind of doing, during those periods where there's not much going on, and it's kind of best to just sit and wait?
Yeah, I mean, sitting and waiting and watching, it helps speed up your learning curve to actually watch intraday, all the breakouts that might be working, or the shorts that might be working. I mean, you need to see more, and that's the whole point of the platform I made. So you can journal like almost every stock that is moving through a buy point, so you can see whatever's going on. It's like trading for 10 years and 1 year versus just getting a couple alerts or something like that. If somebody sends you a stock symbol, okay, but did you journal it? Are you tracking it? I mean, there's so many other ones to track that I think it makes sense to kind of, really pay attention when you're in cash too. And, if you don't like learning, then I don't know that you should be trading, by an ETF or something, but there's always something to learn. The market always changes, and you're going to have to figure out, how to adapt to different environments, and how to be faster when you have to be, and when to be cash, and, be worry about safety first, of course.
Yeah, and I also want to cover a little bit, how you find your ideas. I know you use
Yeah.
FinViz a little bit. So what are you kind of looking for before taking a look at the charts and trying to find a spot that you can manage risk against?
Well, we are looking at stocks and uptrends with proper bases. You do have the 50 over the 200 and the 150. They're all over each other. You're going to kind of get stocks that have better right sides of their bases there. So obviously the Minerva trend templates are good. Look through those kind of names, and I have my own type of trend criteria. So we look through those names, and we make them a little faster with the average daily range requirements. So I'm not looking at utilities in trend. If they start getting fast, then they're going to show up, right? So they filter themselves, and then maybe we want to trade utilities one year. And not that I really want to, but it could happen. There are times those start ripping. But we want to see the faster movers, and look for the tightest buy points in those, and your standard cup and handle bases. Just like Axon here, you got your overall cup, right, and then handle, and then pull back on top of support there. That's what I'm playing as it turns up off that. Just something to look at real quick. You can see a textbook cup and handle with a shakeout. It's not broken. It's a shakeout in my view. And then you have pullback on a support. So you can't even draw a better picture than that. And that's what I'm trading. I'm trading that here, and I'm trading it, here, and adding to it down there. So.
And how do you kind of track the different areas that you want to focus on? So you mentioned you're looking a little bit at the energy space, but not the traditional energy. And semiconductors been so strong. Yeah. So how are you kind of tracking where the puck is going versus what's just strong right now?
Well, you'll see what stocks show up in the trend criteria. Like AMAT was one. I think I tweeted about this. This was making a pivot, and this broke out today. Relative strength, of course. It matches the SMH. You can start with the ETFs, right? And if your ETF looks like a dog, don't trade any of the stocks in the group. If it's just you're going to have the wind in your face, you want the wind in your back. That's the main thing. So if you're trading a home builders, this is doing a little dance on the 50-day. I wasn't sure if I want to short this or long this, but Lennar went through earnings, and I think their numbers look pretty good, despite the action on the day. That is a slight earnings pivot. That could be bought. It's a little sloppy, but you want to look at the other ones. Pulte Homes, something like this, making these kind of flat areas. So if they're all setting up, then that's an area where the money's supporting it. And during this decline, this has just been going sideways. So for whatever reason, the home builders are setting up despite kind of, mortgage rates going higher and all that. So wall of worry, I suppose, too, is something something's climbing that. You want to go for that too sometimes, it's kind of unexpected setups,
Yeah, for sure. And coming back to your shorting setups, you mentioned, that frozen rope type setup, but what are some other kind of go-to ones, a rally back into a declining moving average? What are you kind of looking for in terms of, your ideal short entry?
Yeah. So this is one of the last shorts, that I was getting involved with here. Is this one, interested in this one rather. It's just kind of, the market was going higher. You can see that. And then here, the stock's going lower. So when the market finally breaks, this is your target for a short. And Lulu, I'm sure, is a great company, just technical thing. I'm sure it'll be, higher in a year or something. But, you have this breakdown point, which is pretty clear. And you can try to do it as a pullback buy or as a flat kind of pivot break there, however you want to trade it. But this is what you're targeting when you're seeing this, kind of divergence here. You're seeing the stock go kind of drift off versus the market ripping. As soon as the market rolls, that's going to be your target. And then the longer this kind of rides the moving average with this kind of indecision, then you have like a gap above it, the better. And there's another one. You want to see like a head and shoulders above you. This is one that I've been messing with in here, trying to short. This is actually slightly out of the money for now, but I'm going to close it up there. And, the sizing gets increased as it comes through that area, and then when it goes back up, I'm changing my sizing. So I'm trying to put myself in the position to get lucky. I'm lighting it as it's gone away from me a little bit now, as we're adjusting that. But if you're heavy in this, something like this, and it kind of breaks and looks like that, you're going to be in good shape. And you sort of have a head and shoulders above your chart pattern there. You have kind of a ledge break, and you have this kind of bounce and roll into the moving averages, kind of this convergence of a few of them there, and then a roll. So this is some stuff I'm looking for. And a lot of money is coming out of this, alternative energy stuff for now. But I'm sure you're gonna have to be fast with it. I'm sure your target's going to be somewhere down there, and it's going to be back in the uptrend. So these are just technical trades. It's not any kind of this company's bad or something, but they set up weak. That's the short, and that kind of offsets some of your long exposure, of course. Not that I want to hedge. You want to be concentrated, but the risk reward here looked pretty good. But if the market starts ripping, this is going to be a bad idea. And I'm kind of getting away from the short side in general. My short watch list sort of looks like my long watch list all of a sudden, right? So that's how one of the things I tweeted too is you can say a lot of people have FOMO and they want to buy everything. Maybe they want to even cheat before they come out and all that. Never do that, of course. But you look at your weekly watch list and you go back and see, has anything broken out this week? And if everything on the right side just looks weak and it's rolling over, you really have to stop yourself from getting too involved if you're over trading, because that's just the sign that whatever you're looking at, and that's your weekly watch list. Like that would be, I'll go up to maybe 40 on the week, say, okay, this is setting up the best this week, just technically. Then I'll have a focus list, which is like 8 or less for the day, come in Monday morning. So I'm not all over the place, but you want to check back with your list and see if nothing moves, then you're there's no reason to start pressing anything, one of them slipping out while the rest of them are imploding, because then you're looking at stocks that are all imploding and you're buying the one breakout in a bad environment, which you don't want to do. So,
and do you manage your short positions, any differently than your longs, or like, are you a little bit quicker with taking some off as it works for you?
I'm a lot quicker and more worried about the sizing with this. But I try to buy bigger companies or short bigger companies that really probably wouldn't be bought. Like Apple was a short I did recently. It was this one. It was like I said, and that was matched with the SPY at the time too. I actually shorted the S&P 500 there. It was maybe such an obvious textbook short that nobody would take it because it's a turn off the 200 really, and that's your short. Yeah, that's the short that worked. So as it turned back down, I'm shorting it because it kind of matched the insane move from Apple. How far can that go? Right. It's just Apple going to go to the moon. Like Apple's going to put in a high tide flag at however big that market cap is. I didn't think so. Yeah. So, is everything just under the surface? You want to look at the breadth, of course. You have stocks, not doing great, and just a few money looking for safety. Had something like that in Goldman Sachs too. I think I shorted this one, and then it almost stopped me out above this high there, but then it started to work. So I was in there a little early, kind of sweating that one, but that kind of broke down. Now it's looking pretty negative. So,
and what would kind of tell you to sell your last portion of a short? Because you can see with Goldman Sachs there's a pretty wicked reversal to the upside there. In early December. So would that stop you out, or you're moving your stops down incrementally?
That's the same thing that happened with I think this happened with Apple, right? This faked me out there.
Right.
So the character of these that do this, I wasn't faked out by this one, I don't think. So you're covering somewhere down there or whatever. So yeah, I'm not in this one anymore. You want to go move on to other shorts or revisit. I mean, it'll probably set up again. They're a great company. It's just a matter of the too many people loaded up on it. It looked ridiculous to me. So, and then there's, it's like CEG. I'll probably get stopped on this one if it just pops up here. So I won't get them all right, but you get a bigger move out of some other ones, and that's the play. So.
Yeah, perfect. And I actually don't know if I've ever asked you, about your routines before, but could you kind of walk us through, a typical weekend and kind of what you do to assess the market, as well as, build that focus list, as you mentioned?
Well, I'm in it all the time, so I mean, it really is all off the top of my head. I do actually live stream for an hour on typically on Wednesdays. I make like a weekly video with all my notes. We're looking at the macro, we're building the watch lists, and trying to dial in the themes. And if you're not recognizing the themes that are working, you're probably just going to be buying your standard breakouts, and you're not going to have great results. So the focus has to be there, and the concentrated in the right areas. And you have to. I mean, the position sizing is really the biggest thing. You have to be huge in stocks that are working, really. If they're in a leader, I mean, it can't just be a chart pattern with, drippy earnings. It's got to be, they beat by 80% and you have a chance to get in the stock and there's a certain buy point. You have to be big in those, and you have to be able to hold for at least a little while. In this market, like I said, they come and shoot everything down. So I'm just in and out of the same stocks. That's probably the way to go for now. But that's hopefully that kind of hits on some of that. But there's no one answer to anything like that. So that's too hard to really say.
Yeah,
you got me on that one.
Yeah, no worries. And any kind of tidbits for people to help them identify, what the theme that is working right now, and could that not just be, an area of stocks, but could that also be kind of a pattern that's working more in the market at that point?
Yeah, the patterns actually do matter. You start to see what works, and right now, like I said, I'm doing all pullback buys. Typically, stocks through earnings, the market gives you a chance to do a pullback buy after they shoot down the highs there. But the stocks will tell you, they'll lead you to the right groups. You see what stocks are setting up, of course. You have a little cup and handle in this one. I like this group, but the group itself just kind of dropped out. So if I can get one in this group, maybe this snaps back. That's the other way to do it too, is if you have a very oversold group and you think it could snap back, you want to get the one or two that are breaking out. So that's a little harder to do. It's a little more obvious when it's, GFS and, AMAT. These are all kind of setting up, or like the home builders, SWKS, and, these are all kind of looking pretty good there on the right sides there. So that kind of takes me to the group. That's it. Then you're attacking, you're trying to get concentrated in what you think is the leader. You got to look at the numbers and such and see which one's kind of the faster grower. And it's got to trade well too. You don't want to buy it too low. But I think now we're working on this kind of stage 2 transition. So I think everybody else has sort of adjust to that, because we've been so long in a downtrend that I think some of these are starting to perk up, but they're not all working. There's like a chewy stuff like this. It looks like it's going, and then they shoot it down. I think I got involved with that and had to kick it out. Other ones like that. So, Etsy, but the numbers, they're a little bit all over the place too. So you want to see numbers that are consistent. And one of the things that I'd say is one of the better ways to know if you're going to go from stage 1 to 2, as Crocs has this great example, is you sort of have this overall, so stage 4, maybe 1 and 2, right? But your sales, okay, what were your sales in March 2021? Okay, your sales over there are 460 million or so, something like that. And then your sales growth down here is, you're doubling sales, and your earnings per share growth is huge. So they're not really going out of business. That's the key, and they're growing. So that's the ones you want to target. I was looking at it in here and just never able to really get involved. And you won't probably want to sell. They're shooting these down. Remember what I said? They're shooting all those down. So you want to sell into that, and then look for the next viable area. But that's kind of the stage 1 to stage 2 clues. You want to see this. You start with sales, and some people will say, well, you got to look at earnings. The earnings are there too. So you start with that, make sure that they're selling more and they're not going out of business, and they're not going to have their turn. So, I mean, there's a lot of these stocks like RELY is a kind of a surprise thing going like from stage 1 to 2 here with sales growth and kind of unknown. So I think a lot of people are going to miss that one, and looking to get involved, but it's just kind of not viable here as it goes into earnings. You can't hold on to that. So, and I'm not buying right into earnings like that anyway, but this kind of confirms the idea that a lot of stocks are making those transitions into the stage 2, and FTNT is another one, maybe sort of starting to turn back up here. So
yeah, and I'd love to hear your thoughts and maybe some look at a few of the charts of the banking stocks, because those have been obviously absolutely destroyed, and you kind of took this as a sign as, maybe things can finally work. But yeah, what are your thoughts on these charts?
Yeah, so I say that when you have to take the volume bars and separate them off the charts, when I'm using stock charts, you might be in a downtrend, but this one, the market separates it, but you have your COVID low support there.
Yeah.
So it's sort of on that. This is sort of a disaster, but it looks like the money's not too scared to go into tech somehow. So imagine if this does start basing and turning up. You're probably going to be capped by this kind of downtrend here, and you do have a sort of head and shoulders look to the weekly there. So not too surprised that rolled over, but if this starts turning up, it's just going to be a tailwind. So I think it'll probably find its footing. They're guaranteeing everything, and every chance the government gets to guarantee, backstop, and print, and stimulate, that they're going to be there. So I think some of those conditions are starting to form up that's going to happen maybe down the road, and then we're going to have some kind of move here as this is basing. You get the NASDAQ basing and starting to turn up, and we'll see how that goes. But you get crazy moves in NVDA and all that. Just kind of prove that maybe the money does start to want to take the risk finally. But we need the breadth we need things to spread out a little bit. It's a little concentrated in just a few names, so that's the real danger.
Yeah.
It's the chart is showing some different down 30% real quick.
I
Something
hope
wrong with it. Something now it's up 18. So I don't know who's playing with that after hours, but someone's oh, look at that. That's kind of fun. You keep that in the video.
Yeah, we'll do. Yeah, and yeah, do you pay attention at all? You mentioned macro a little bit. Do you pay attention to what kind of the Fed's doing, and kind of, whether they'll stop raising rates and all that, or it's not, mostly it's about the charts for you?
Yeah, I mean, it's part of the cycle. You're gonna have to, I don't want to try to be too smart and game it all. Let those guys on TV do all that. We are just trying to play the stocks. They could completely cut rates and the market could crash. I'm not throwing money at stocks then, because they won't be working. So I mean, stocks first, but yeah, the Fed, don't fight the Fed. Obviously, the obvious thing there, when the Fed's behind you, this is going to work great with standard swings, and it hasn't been working great for a long time. So being faster and tighter, just this great practice. If you're holding on to your account, for the most part, even if you're down a little bit or down substantially, you've learned your lessons. Hopefully, you've learned something, and it's time to get your risk management right for the next uptrend, really. And when things start working, profit from it, and start worrying about your equity curve and not trying to pick bottoms and using loose stops and no stops and things like that. And don't trade on tips and everything, because I'm wrong more than I'm right. But when I'm right, I try to press it and be in the right stuff. So.
Perfect. So Leif, yeah, thanks for running through all that. We've got a lot of questions answered. I always like to close it out with any last bits of advice for traders out there right now during this environment, or maybe to take advantage of the eventual bull market and nice trend, which eventually we'll go ahead and see.
Yeah, I mean, you got to speed up your learning curve. You want to get many years of trading experience out of the time you have. You got to go back and review everything, read all the books. Take notes, but you got to put it into practice, of course, if you're new. The trading kind of brings out your true self and all your flaws. So you're going to find things you do wrong. You have to sort of adjust. If you're not willing to look at yourself and say, okay, some people can't be wrong. That's a big character flaw a lot of people have. You're going to be wrong a lot, and you have to accept that and be able to change your mind and be flexible. And it's healthy for the brain. You got to do a lot of work though, and you have to adjust maybe your personality itself. Some people are overly aggressive, and some people aren't aggressive enough. So there's a lot of psychology in there that's going to come to the forefront, and you have to kind of study yourself also, besides just the setups, the stock setups, and everything you see in Richard's cool videos up here.
Yeah, there you go. Well, Leif, thank you so much as always for chatting with me, and I'll have your links down below to your Twitter as well as Champion Team Trading.
Sure.
Anywhere else where people can reach out to you if they want to connect?
Just check me out on Twitter at Leif Soreide at Leif Soreide. That's my Twitter handle.
Yeah, perfect. All right, everybody. Thanks so much for tuning in. If you enjoyed, make sure to go ahead and leave a like down below, subscribe to the channel, and we'll see you guys for future videos. Take care.